Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over the latest you need to know on AMC stock, but I want to take a big focus on where I think the markets are going next and where to position potentially your portfolios. Now, I'm not a financial advisor. I'm not a financial planner. This is not a recommendation. It's not advice. Typically, what I say is risky and could cause you to lose money. So do not trade, invest your money based on what I say. In this video or any other video, it is not financial advice. So with that being said, I will provide strictly my opinions and let you guys know what I am doing personally. I think this is one of the more important videos I have made in a very long time because I personally think it's pretty obvious what is coming next for our markets, and there is a huge opportunity on the horizon. So hit the like button and subscribe to the channel if this is your kind of video and you like to make money and you want to make more of it. This is your place to be, and hopefully this video serves you well. Subscribe to the channel as well, and let me know down below in the comment section what you think is coming next for our markets. So first things first, I want to talk about what's coming next for our markets. It's been a very long time since things have been this clear, if you will. We just got a lot of our catalyst out of the way. We've gotten a lot of economic data over the past couple of weeks. The narrative is clear. The economy is slowing, but it's still strong enough. It's slowing enough that you're probably going to have downside pressure on inflation. You're not quite in a recession. This could allow the Fed to ultimately cut rates. So that's the narrative that's been going around. We just got big tech earnings out of the way. We still have Nvidia, and Nvidia could be very important, but I think the markets are trading a lot less today on AI hopium than they were over the summer, right? I think the summer was obviously all about AI. And if Nvidia were to have bad earnings, it would have been a terrible situation. I think today it's more about the Fed and where interest rates are going in 2024. So Nvidia, sure, it will be important, but if Nvidia does disappoint, I don't think it's going to be the end to our markets by any stretch of the imagination. Things are a little bit different now than they were over the summer. At least that's what it seems like in my personal opinion. So we still do have Nvidia, but I think earnings were pretty good. That wasn't a cause for concern across the board. You just got the Fed. The Fed made it very clear. They're close to cutting rates. They're close to a pivot. And why? How do we know this? Well, it's the reason why the markets have been going higher recently. It wasn't earnings that were super spectacular. Earnings were not exactly spectacular. It was the Fed and a couple different statements they said. And Fed speakers we have heard since then. Fed Bostic said, we need to start cutting rates before we're at 2%. Fed Bostic thinks we're going to be at 2% inflation by the second half of next year. That means we should start to get quite a few rate cuts coming here in the near term. Fed Jerome Powell said, if stocks fall, if the dollar rises, if long-term yields continue to rise, that's going to put pressure and could change Fed policy. He opened up the door for a U-turn at the last meeting. So now going ahead into the future, I think it's pretty clear what is going to be coming next. There is going to be positioning into stocks that will benefit from rate cuts. That's the bottom line to it. Big tech benefited from the Fed raising rates because they collected more interest on their cash, whereas it really didn't affect the big tech business models, right? Big tech business models were not affected by the Fed raising rates, like literally at all. It does not affect if someone buys an iPhone. The Fed raising rates does not affect if a Microsoft Cloud service gets bought by a company or not. Maybe it could actually help some things like that as companies are trying to better efficiency and bring in more to the bottom line. So I think in that regard, big tech is probably not going to be the winner heading into 2024, but especially in 2024. Now the markets are forward looking. So right now we're expecting the first rate cut in March. There is, let's go ahead and pull it up. There is a actually, no, we're not expecting the first rate cut in March anymore. In May, we're not even pricing in a rate cut. Yikes. It's getting pushed out to now June. We're expecting the first rate cut. So about 3 months before you get the first rate cut, the markets will have mostly or partly priced in who's going to benefit from that. Beneficiaries of the Fed lowering rates are small, mid-cap companies and heavily financed companies like a Tesla, right? When 90% of your business buys your products via financing, when rates go lower, that's going to be good for your business. That's going to be good for Tesla. I'm positioning in some Tesla right now. Your small mid-cap stocks that need to refinance, right? That are going to have debt maturities that could benefit from refinancing or just a lower cost of capital. Well, those guys are also going to benefit big time, but not just any old stock. You have to have some remnants of quality as well, or be a name brand at the very minimum. Like an AMC, that's a name brand. That I would say is better quality now than it has been in years prior. AMC just turned the second net profit in a row. First it was 8 million, now it's 12 million. What's next quarter going to be? Hopefully in the 20s or more, right? That's a higher quality company rather than not. Sure, they have a lot of debt. That's true. AMC will benefit from a reduction in rates and hopefully be able to refinance some of their debts. You've also seen bond activity, your CDS, credit default swaps on AMC, actually being pretty bullish as well. So it looks like some people are actually pretty bullish on AMC under the surface. I think that comes more so down to the actual business itself rather than the stock price, because the stock price is getting beaten down because we just keep getting diluted. But nonetheless, when the Fed does cut rates, I think AMC will be a big beneficiary of that and likely go higher. But also small mid-cap stocks like Tesla, that's where I want to be positioned in for 2024 firmly. I think you have from now until probably March or so of 2024 to get your positioning. On the other side, I do think there is still going to be one last crash event. I don't think we've seen the end of the downside. Now, why is that? Well, usually, just statistically, when the Fed cuts rates, stocks tend to fall about 24%. And that's because usually the Fed is cutting rates because there's a problem. It's been a long time since we've seen a soft landing. That's certainly a possibility that we kind of just skate by without a recession. But whenever it looks like we're heading into a recession, as long as inflation does not spike up big time again, the Fed's going to start cutting rates. So I'm not certain that's going to cause that much downside this time around. But when you start to get recession fears, when investors are fearing a recession, well, you will see stocks fall and bond yields fall as well. In my personal opinion, you will get that fear, that panic moment of, hey, crap, we're heading into a recession. How deep is it going to be? The Fed has just risen rates at the fastest pace they ever have. Defaults on autos are at 30-year highs. People are falling back on credit cards like never before. The balances on debt are out of this world, right? Maybe some people start to foreclose. Whatever's happening at the time, another banking crisis. Look at Bank of America or Citi. Yeah, those do not look good at all. Who knows? Ultimately, that's my point, what the reason is. But once you get close to that recession, that's when people will start to panic. I think it's probably beginning to mid 2024 that actually happens. So I think that is your ultimate buying opportunity. I think you buy some now, or at least I'm buying some now, but holding a lot of cash on the sidelines as well. I want to be able to take full advantage of any fall that we do get in the markets. Unfortunately, I think most of the fall would actually take place in big tech because they do not stand to benefit when the Fed does lower rates, whereas small mid-cap stocks, some of your stocks like a Fubo, for an example, that hit a low of like $1.07. I was buying Fubo at $1.07. I don't think that stock's necessarily going back to $1.07. So some of your stocks might not go back to their ultimate lows, but, probably will benefit, quite a bit, right, towards the second half of 2024. And that's why a lot of money is going to position in those guys, even if there is a downward movement in the markets. I think in an essence, big tech is going to lose their dominance, and that's going to be replaced by a broader rally in our markets, right? I don't think big tech and Apple's going to 230 before a PayPal goes to 100, right? Just for an example, or AMC goes back to 25 before an Apple goes to 230, right? I think AMC is going to 25 before Apple goes to 230. So that's kind of the way I'm positioning for it. But I do think there's one last crash event that will be coming around the corner. Now, let's take a brief look at the activity here in the options world for AMC stock. On Friday, you had 6 orders totaling $500,000 with a positive order value of 20%. As you know, earnings were last week. They were freaking spectacular. Everything was great across the board. The writer-actor strike ends, but AMC files a filing with the SEC to sell $350 million worth of stock. This is going to mean AMC is going to have well over $1 billion in cash. And just look at the overview of the company. I mean, the market cap is $1.59 billion. So as long as AMC is not bleeding out capital here, which it's not, it's technically profitable now for the last 2 quarters. I mean, that is, good. You almost have the same amount of cash in your bank as your company's worth. That's never going to be a bad thing. Now, you did get on Friday a mean reversion signal. This is a buy signal. The significance is for almost 4.5 stars. The status is live, and it does say the trigger price is $8.01. Position so far, 0% return, 1 day target price $10.10 and a stop loss at $4.22. Yeah, I don't think AMC is going to $4.22, but I do think $10 per share wouldn't be too crazy. Markets, they're going to get over the dilution with AMC. I think probably pretty soon. You've basically priced that in. AMC is now down to $7.96 per share, so you've fallen quite a bit following earnings. Now, the exciting thing for this upcoming week is you do have calls in the money of about 29,000, calls out the money 135,000. So there's a lot of dry powder on the sideline. If you do see a bounce, that could be really good for AMC stock. If you look at the puts, you're basically already loaded up with puts, so I don't think the situation is going to get much worse in this upcoming week as far as the bearish option activity. Puts in the money, 35,641. Puts out the money, 35,005. So like a 1-to-1 ratio, which is crazy. All right, 35,000 puts in the money is insane. And AMC has a lot more call activity for next week. So, point in being, if you do see a rally to some degree, puts could go out of the money. That is bullish. Calls could go into the money. That is also bullish. We don't have any specific news to actually go over, so we'll just go ahead and get into. Ooh, let's not leave it out though. We almost forgot. The short activity. The short interest has actually risen a little bit as of recently. Now you're at 9.65%. You were at 6%. I don't think these numbers are correct either way, so take it for what it is. You're almost at 10% short interest again. $166.25 million worth of short positions. Days to cover 0.87. 19.09 million shares that are currently sold short. 17.38 million shares that are currently out on loan. Cost to borrow 1.29%, utilization of 35.8%, and a short score of about 57 out of 100. All of this data is making a move higher as of recently. Cost to borrow average 1.43%, cost to borrow minimum 0.35%, cost to borrow max 14.39%. So there you have that. Let's go ahead and now get into some of the technicals here briefly. Number one thing that I will point out is the RSI. The RSI is at 36.09. Like you've seen back here following the conversion of APE into AMC, you can stay oversold for a while, but usually you tend to break out to the upside. Now, anything under 50 is technically on the oversold side, or at least on the bearish side. Anything under 30 is technically like really oversold, really bearish. So you're heading down to those levels pretty dang quickly. I think you probably bounce around here, and then you can start to stabilize and then make your way to the upside. Hopefully this means we're not going to get dilution for a while. Other than that, there's really nothing bullish to say. You fell under the level in which I wanted to see support at about $9 per share. You're at $7.96 per share. So if you're looking for any support on the downside, that support's probably coming around $7.50 per share, and that's probably where the stock is headed before you get that ultimate bounce. Could you bounce here? Sure, but you still could fall a little bit more, in my personal opinion. Overall, I think the risk to reward always looks good when you're trading at a 52-week low. Anytime you've bought AMC when it's traded at 52-week lows, you've always made a lot of money, at least in the short term, right? You do tend to get a bounce 9.5 times out of 10. Even more recently, back here, you hit $7.05 on September 11th, 2023. What happened? By October 12th, 1 month later, you were hitting $11. I mean, that is what? A return of, let's see, 58%. That's actually insane. Okay. So I do think right now is an attractive risk to reward for AMC stock. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.